En ce monde, rien n'est certain à part la mort et les impôts. Tabernacle. Death and taxes, people. Death and taxes. Well, I don't feel like talking about death today, so. Taxes it is. My name is Arturo Zeraldo, and I want to share my musical knowledge and experience with you to make your life better. So the first thing I want to say today, before we dive into talking about taxes, is obviously I am not a tax professional or an accountant or anything. I do viola, I don't do math. So that should be obvious. Don't take anything I say as, legal or serious advice. However, I have done my own taxes for more than a decade, and then I finally started using a CPA about 4 years ago, and I gotta tell you, I think it's about the best $220 I could ever spend. That is how much I actually pay each year. Mine are super complicated, and as they probably are for most of you if you're a freelancer. I have had as many as 5 different state returns in a single year, and I tell you what, the full week of time it takes for me to do it myself versus handing all this prep stuff over, which is really easy because if you check out my money management video right here, you'll have everything already ready to go on spreadsheets, and it'll be super easy to pass it off to somebody else. And plus, then you're not making mistakes. You're not going to be audited probably, at least you shouldn't be, because it should all be really clear and well done, and you're going to get the most money back and pay the least tax that you can. So highly recommend it. I'll show you exactly why we do this. This is our actual Book O taxes from 2020 right here. Shout out to our accountant. For reference, this is the Beethoven Complete String Quartets. It's not even twice as big. So definitely worth the money because this sucker, nah, no thanks. Here's the harsh reality. Taxes are your job. That's true for everyone. Everybody obviously has to do them, but when you're a freelancer or a teacher, you work for yourself, that burden is way bigger and way more important. You have to be everything. You have to be your own HR department and your own accounting department. So the first thing you need to understand is the difference between your yearly taxes, the thing everybody thinks of that comes around on April 15, and your estimated taxes, which basically nobody seems to know about. Nobody ever told me about until I actually got to an accountant. It's not hard, but you really need to understand it. Otherwise, you are going to be in deep trouble like I was the first time I had a big year in freelancing and a much smaller year than I normally did in my W-2 form of work. And I had a $2,000 tax bill surprise. All because I didn't know about this. So that's the next step. So the first important thing to understand about your taxes is the difference between the end of year taxes that we all think of and estimated taxes. The one at the end of the year you already know about, it's what we all have to do. Estimated taxes are what you pay throughout the year if you're going to have a high tax burden. We should all know about this as freelancers, but I have a feeling that, like me, you probably don't know anything or much about it. If you expect to have a tax burden of $1,000 or more, meaning you will owe that much money to the government at the end of the year, you are required to pay estimated taxes. So even if you know it's coming and you just think to yourself, I'll save that money in an account and just pay it all at once, you are not allowed to do that. Whether you think that's good or not, different discussion. But you owe that money quarterly, every 3 months, to, it could be federal, state, and or city. Totally depends on your tax situation. So this is again why I suggest you get a CPA, but at least look into that and start to understand the differences. The first step to me when I start thinking about taxes and how to plan for them is to figure out my effective tax rate. I did mention this in my money management video, which will be down in the description as well as maybe up here one more time. Basically, look through your past 2 to 3 years, assuming you haven't had a huge change in income. Figure out the actual tax that you paid to the government. So don't just look at the bottom of the form and see what you owed, but the total you paid for the year. Take that out, divide that rather by the income you made for the year, and that'll give you the actual percentage you're paying, because if you just look at the tables and figure out what your tax bracket is, it's not necessarily going to be accurate to how much you actually pay at the end of the year. So once you have that number, you can kind of average that out always leave a little buffer. So if you figure out it's normally, let's say between 11.5 and 12%, maybe count on it being 12.5, just in case, 13 even. Then you take that same advice from my money management video and you have your 2 separate savings accounts minimum. You put your tax money into a tax only account. This is not your emergency fund. This is not anything except a tax account. And when you go to pay your estimated taxes every 3 months, you pay them straight out of there. And so there should always be enough money. There should be a little more, hopefully, than you needed. But that's what that account is for. The other thing to know is your local, if you have one, and state tax rates. So where I live in Michigan, we have a 4.25% income tax, and the city I live in also has a 1% income tax. So depending on how I get paid and where from, I have to be aware of my federal, state, and local income tax numbers. Before we get into that little bit of detail, as a freelancer, remember that technically, because you are a business, you are required to report any income you make. So even if you make, $50 at some little gig, technically you should be putting that in there. I'm sure many people fudge little things like that, and it may not be the biggest deal in the world. But know that anytime you make $600 or more from a specific vendor, a specific place paying you, they are required to report that as well. So that's going to get to the IRS whether you like it or not. And if you don't report that, that is going to send up a big red flag. Every time you get paid, you need to be thinking carefully about how much or how little needs to go into that tax account. So you need to understand the difference between being an employee and being an independent contractor. Many of you may know this already, but for those that don't, if you get paid as an employee, that means that you're going to get a W-2 at the end of the year. That means that they're taking out taxes and Social Security, Medicare, stuff like that. If you get just a check with no information on it and you get a 1099 at the end of the year, that is something totally different. So they're not doing any withholding of taxes. So when you get paid as a 1099, it can be frustrating, but also very clear because you need to save all of the tax burden you would have from that yourself. So for me, that's about 15%. Whenever I get paid that way, any of my teaching, which is basically the same thing, it's just the full amount of money coming to you, nobody taking anything out for you. You've got to set aside whatever that percentage is of your federal, state, and local, if you have it, taxes in one place right off that check. It gets a little more complicated when we talk about being paid by employers. If you're getting a W-2 at the end of the year, if you get a check or a pay stub that shows that you've got, Social Security, Medicare, different taxes, all that taken out, then you have to evaluate what you still might owe in tax after that's done. So for example, I live in the city of Grand Rapids, so I owe state of Michigan, federal, and city of Grand Rapids income tax. Because they are located in the city of Grand Rapids, they take all of that out for me. So they are basically the only check I don't have to take something into my tax account for. When I work in the Kalamazoo Symphony, which is just 45 minutes away, but in a different city, they will take out my federal and state because it's the same state, but they will not take out anything for city of Grand Rapids. So when they pay me, I'm putting about 1% away because that's my city tax burden. To make things a little more complicated, when you're signing up as a new employee anywhere, you're filling out, I believe it's the W-4, you have to make sure that you're careful about your exemptions because that's the spot that sets this all in motion, that tells the company how much they're going to take out each time they pay you. And this is where, again, having a CPA or a professional you can talk to is going to be really helpful because when you follow the guidance on the form, they're assuming that you have one job or maybe two, and they're not considering all this other stuff you have. And this is exactly how I got myself into that situation of having a surprise $2,000 tax burden, because I assumed that when I was getting paid as an employee, they were taking out the appropriate amount of tax. But because that one place only pays me a fairly small amount of money in the course of a year, they were taking out something like $10 a paycheck, something incredibly low. And so then I owed all this money and I hadn't been saving enough from my freelance work because I assumed more was coming out there. So even though technically I should be taking the exemptions and being charged as a married filing jointly sort of person, that's what we do, I actually have to sign up as take at the higher single rate and 0 exemptions, even though I would qualify for 1 normally, because otherwise they're going to take so little, it's not going to help me out. And then, again, working with my CPA, I can figure out how much I'm going to have to pay in estimated tax to balance that out. And in the end, everything's okay. So I highly recommend that you don't just go for whatever it says on the form. Talk to a professional about it, or do your research and figure out exactly what's going to work for you. And especially when you start getting those first checks anywhere that you're working for the first time, look carefully at what the tax they're taking out is. And if it doesn't seem high enough, or if your check seems too high and you're too happy about how much you're getting paid, double check, because you don't want to end up paying the price at the end of the year, because they will come for that money. It's just now or later. The most important thing to take away is this lesson about estimated payments. So if you think there's a possibility that in any given year you may owe $1,000 or more in tax at the end of the year, it's your job to start paying that in advance through estimated taxes. And the reason that's so important is that they may give you a year where you don't have a penalty if it happens once, but after that, there's some pretty steep penalties, fines, interest they'll charge you, all kinds of stuff. And you don't want to be giving away any more money than you have to, because chances are you already don't have enough. So make sure that you have that separate tax account, that you're filling it correctly with every check, depending on what you owe based on how you're being paid and from whom. And you'll be good. Just make those regular payments, talk to a professional, get a CPA, and you'll be in great hands. If you like this video, hit like, hit subscribe, check out Money Management and any other one. I'm going to keep talking about different aspects of being a business person, being a musician, performing, giving lots more videos. So let me know in the comments what you like, what you don't like, what do you want to learn about, and what's your experience with all this stuff. Do you have any tax disasters you want to share with us? Because man, they can be rough, but gotta laugh at them later, or I don't know what else you're gonna do, right? So, c'est la vie. Thank you for joining. Have a great day. Appreciate you being here. Peace.